The ghost towns of luxury. When investment buildings stand empty, walk through any major American city at night. Look up at the gleaming towers. Count the dark windows. Luxury apartments worth millions, sitting empty. Built not for people to live in, but for wealth to hide in. Tonight, we explore the buildings designed for no one, the investors who bought what they never planned to use, and the housing crisis hiding in plain sight, 30 stories above our heads. This is State Log, the vertical vault in Miami, a tower called Porsche Design. 60 stories, 300 units, 40% vacant. In Manhattan, buildings along Billionaires' Row stand like glass monuments to absence. Apartments selling for $20, $30, $50 million, owned by shell companies in tax havens, visited twice a year, empty the rest of the time. This isn't housing. This is storage. Storage for wealth that needs somewhere to exist without being seen, taxed, or questioned. And it's happening in every major city across America. Between 2015 and 2024, developers built more luxury units than any other housing type, not because people needed them, but because investors wanted them. The formula was simple. Build high-end. Market globally. Sell to foreign capital. The units don't need renters. They need buyers. And the buyers don't need homes. They need assets. The math that doesn't add up. Here's what they don't tell you. A luxury condo in downtown Austin sits empty. Its owner? A limited liability company in Delaware. Behind that? A family in Singapore, a businessman in Dubai, or a trust fund in Monaco. They're not buying to live. They're buying to park. Park money. Park value. Park anonymity. Meanwhile, the city's median rent rises. Actual residents, teachers, nurses, service workers, are priced out, pushed farther from the center, forced into longer commutes and smaller spaces. The housing shortage isn't just about supply. It's about who the supply is built for. In 2024, over 15% of luxury units in top U.S. markets sat vacant year-round. In some neighborhoods, that number reached 30%. Entire floors, ghost floors, where the lights never turn on, where no one cooks dinner or raises children. Just capital, suspended in concrete and glass, the ripple effect. When developers chase luxury, everything else suffers. Affordable housing projects get delayed. Land prices soar. Middle-income families find fewer options. Cities like San Francisco, Seattle, and Boston have thousands of empty luxury units, while homelessness reaches record highs on the streets below. The disconnect is staggering, but it's not accidental. It's structural. Developers follow the money, and the money isn't in affordable housing. The profit margins are thin, the risks higher, and the buyers harder to find. Luxury? That's where the returns live. Pre-sold to investors before construction even begins, often with financing from foreign banks looking for stable U.S. assets. So towers rise, and communities fracture. The hidden crisis. Behind the vacant units is a deeper problem. The financialization of housing. Homes used to be places. Now they're products. Commodities traded, flipped and stored like gold bars or stock portfolios. Private equity firms buy entire buildings. Foreign nationals diversify with U.S. real estate. Cryptocurrency millionaires convert digital wealth to physical property, and every transaction pushes the market further from the people who actually need to live somewhere. In cities like Vancouver and London, governments finally acted. Vacancy taxes, foreign buyer restrictions, transparency laws. Some U.S. cities are starting to follow, but the momentum is slow because the industry, developers, realtors, financiers, profits from the status quo. The reckoning, but the market is shifting. Remote work changed demand. High interest rates slowed sales, and luxury inventory is piling up. Developers who bet on endless foreign investment are now facing reality. Units that won't sell, loans coming due, and cities full of empty towers that generate no tax revenue, no community, no life. In Miami, some luxury buildings are converting units to short-term rentals just to generate cash flow. In New York, price cuts are appearing on properties that once seemed untouchable. The ghost towers are starting to haunt their creators, and a new conversation is beginning. Should housing be treated as a human need or an investment vehicle? Can we build cities for people instead of portfolios? The lights are off in thousands of luxury apartments tonight, not because no one wants to live there, but because no one was meant to. They were built for capital, for secrecy, for speculation. And while they sit empty, families search for affordable places to call home, priced out by a market that never considered them in the first place. This is State Log, helping you see the bigger picture behind every number. Stay informed, stay prepared, and don't forget to subscribe for more deep dive stories on the truth behind America's real estate reality. Because when you understand the state of things, you're ready for what comes next.